Usual, we just start off with our disclaimer. So trading involves the risk of loss of capital. It's not suitable for everyone, but of course we hope it is for you. Many companies will provide you with leverage, so just be aware that you can lose substantially more than that initial investment that you make. The views, opinions, information contained in this is just purely for educational purposes. We're not trying to encourage you to trade or invest. That has to be your decision. And of course, you should carefully consider the risks, your financial situation, definitely your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, that you can afford to lose. Any doubts whatsoever, seek independent financial advice before you risk your capital. Okay, we're going to start off with the highlights of last week. We saw central banks raising rates, so the ECB and Bank of Canada 75 basis points, Australia 50. So Australia has just been a little bit more cautious now. ECB 75, the biggest one they've ever done. And it's nice to see them back into positive territory, I can't lie. And hopefully they'll stay there. Obviously, the reasons aren't so great, but let's just hope that they can find that balance. The biggest problem obviously is the power at the moment. And Powell, he was speaking and he remained focused on bringing inflation down. Very, very positive on that, very confirmed, determined that he's going to bring that inflation lower. In the UK, sadly, our Queen Elizabeth II, died at the ripe old age of 96. She was our Queen for 7 decades. Obviously saw a lot of changes over those times, but she was definitely a great figurehead for us to have. And also now at the same time, pretty much, we've got a new Prime Minister as well, Liz Truss. She's taken office and she's immediately put caps into place on energy prices. For business, it's going to be for 6 months, for households 2 years. Yes, they're going to still go up, but they're not going up anywhere near as much as they could have done. It's going to probably cost the UK about 150 billion pounds to do those caps. Gilts hit 3% because obviously government borrowing's going to go up. Gilts are the UK treasuries. It's the highest for over a decade. OPEC, they cut by 1,000 barrels a day. 100,000 barrels a day. I think they'd worry too much about 1,000, which is just reversing the last time that they put their quotas up. But to be honest, they can't meet those quotas anyway, so it doesn't really make much difference. BTC, Bitcoin rallied end of last week, and of course, there is that connection with the stock market, especially the Nasdaq, obviously as well, which will come up with the ETH merge as well. That's coming very, very soon. Okay, so now we've looked at what happened last week. Let's look at what we're expecting this week. So there's plenty of Fed speakers. Expect some strong but probably mixed views from them. They all know that rates still need to go up, but they could be mixed on how much they think they need to go, or not so much necessarily maybe the September 21st one, but after that. So just listen out for them. CPI is going to be the focus, obviously, ahead of the next FOMC. Gasoline prices are lower. It could drag inflation down slightly more yet. Retail sales were pretty flat. Don't know yet, but just expecting that, shall we say. Michigan sentiment possibly higher. US data still strong. There's job creation. The dollar dipped at the end of last week from its record rally. But, again, I still don't believe that's over for the moment. Against certain currencies, possibly it might struggle that little bit more. But the pound and the euro, what's going on with inflation, what's going on with power prices, energy prices. You know, it's almost as if the US is sort of isolated. You know, it's self-sufficient. You know, they can sort of almost look after themselves in pretty much every direction. You know, whereas Europe, UK, and most other countries don't have that luxury. Going back to the UK, so looking for a better GDP, not great, but probably a bit better. You know, the job offers are dropping though. I remember I've been mentioning this over the last few weeks, but there's lots of jobs on offer, but I don't believe they're all real anymore. They've either been taken up or people just haven't bothered to actually delete them. And retail sales, well, you know, we could see a slight improvement there. So CPI, we're looking for on year, which is what I look for mainly. Headline probably around 10.2%, and the core round about 6.2%. PPI year, input prices 21%, which is slightly lower. Output prices around about 17.8%, which is slightly higher. And the core round about 13.9%. Remember, we don't know these are just projections, so I'm just giving you a bit of an idea. And of course, the energy price cap could reduce the expectations of inflation. It hasn't topped out in the UK yet, I wouldn't say, but you know, all these forecasts of 16, 20%, now that the government's coming in and helping the households, in my mind, are too high now. You know, we could see it maybe 11, possibly 12 before it starts to decrease if it's going to. For the EU, we've got the ZEW surveys. You know, you've got to expect them to remain low at the moment, along with industrial production, you know, all the power costs, etc. there. They have got HICP coming out, you know, harmonised CPI basically year on year. Headlines expected around about 9.1%, core around about 4.3%. So, you know, what is the difference between headline and core? So for you guys that may be a little bit new to all of this, so CPI, PPI, so when we look at the core, which is, you know, what pro traders are much more focused on, it removes some of the more volatile products such as food, energy, alcohol, and tobacco. And of course, the big question for the EU at the moment is, will they be able to agree an energy cap? And would it be just on Russia, or would it be on all suppliers? You know, fortunately, with the UK, they can make that decision themselves these days. But, you know, getting 27 countries to agree to things just seems a little bit difficult at times. I just don't know why they just don't have a majority decision rather than it has to be unanimous. Okay, so moving on to China, industrial production and retail sales. You know, they put a rate cut in recently to 7.5%, 2.75% that is, and that could boost a little. But you would expect it to weaken further from the lockdowns, and that data from the lockdowns hasn't really sort of impacted the data yet. That's going to come a little bit later on, so just be wary of that. Australia unemployment is still around about 3.4% expectations. You know, again, you know, it's very low. There's always some people that can't work, some people that don't want to work, so 3.4 is pretty much full employment, and it's a part of the metrics that's used by the RBA for their rate decisions. India CPI is expected around about 7%. Just a little sort of heads up on crypto, if you're into that, the ETH merge is expected this week, barring any technical complications, and I'll explain that just a little bit more later on. So here we're looking at the macro outlook. You know, the US inflation's off the highs. However, household wealth is down 6.1 trillion in the second quarter. It may sound a lot, but I'll explain why it's not really in a minute. UK, more to come. but that energy cap means that we could peak, as I mentioned, about 11-12% soon. The pound hit a new low for decades at 114. Let's see what else Truss can deliver. And of course, it's probably making the Bank of England decision that little bit harder. And just because really, what's going to happen to inflation now that the government's going to absorb a lot of those costs. By the way, the Bank of England meeting, the MPC meeting, has been pushed back a week to the 22nd because of the death of the Queen. Another note, gilts hit 3%, which is over a decade high. But just remember, the gilts are basically UK treasuries. Okay, so the EU is looking to cap energy prices if they can agree. As I say, I just can't understand why they don't have a majority voting system these days. It would just make things so much quicker. The euro's under pressure. The ECB put rates up and it blipped above 1 and then went back below. But it closed by the end of the week just over 1, so just over parity with the dollar. And of course, you've got to look at the euro and say that it's closely correlated to what's going on with the gas and power prices at the moment. So again, something to look at, just something to be aware of. And also, while we're talking about gas and power prices, they impact the fertilizer prices as well. So stagflation, that could be experienced by some nations. What is stagflation? Effectively, it's inflation without any growth or very little growth. And then, of course, we move on to recessions. And as I mentioned earlier, US households, their wealth dropped by 6.1 trillion. But, we really shouldn't feel sorry for them. It's still up 27 trillion since COVID. And of course, that is still not the end of it. There's even more after that, because overall, they've got an incredible $144 trillion between everybody. And that, is a reason why the US economy is still so strong. Higher mortgage rates is starting to make a little bit of an impact. It dented Q2. Plus, obviously, those lower equity valuations of stock portfolios and their pension pots as well. Energy remains the key inflation impactor, and it's just impacting so much. And Europe governments, that are they going to take action? Obviously, in the UK, they've already come straight out and done something. Are others going to follow now? And if so, if they do, then that could determine and make it a soft landing or even a shallow recession, or maybe not even one at all. If they don't, some countries will go into a deeper recession. Central banks are determined to beat inflation, and they're going to do that by continually increasing rates, even at the cost of putting countries and nations and economies into a recession. That it's easier in their mind. It's easier to fight a recession because they can reinflate again than it is to try and control inflation when they don't have that much control. They can impact demand, but they can't impact all the supply issues that are going on. And we've got this constantly. It's improving, but with Chinese lockdowns again, are we going to see? Are we going to see basically a slowdown in the supply chain recovery? Semiconductor supply is still lower. However, demand's decreased as well now. When we look at Russia invasion of Ukraine, 6 months now, grains are being exported, and Ukraine now is having actually a little bit of success of regaining ground in the north, which is amazing. And I think it surprised the Russian army as well. When we look at food and energy, prices are still high. They're not as high as they were after Russia invaded. But, you know, again, you've got to look at other impactors as well, such as the weather, you know, fires, droughts, etc., and supply and demand, of course. And I'm still not sure why there seems to be such a shortage of workers, or indeed so many jobs available. And this working from home is still preferred by so many people to returning to the office. Perhaps that's one of the reasons, and some of them would rather give up their job than do that, and then just find a job elsewhere. As I mentioned, crypto, the ETH merge it should occur this week. There's no guarantee, but it's supposed to happen this week. And this is where they go from change of proof of work, POW, to proof of stake, which is POS. And it should reduce energy usage by, listen to this, over 90%. You know, the miners for ETH basically use as much energy as Chile as a country does. So that will be a massive saving. Japan's ready to intervene in Forex if the yen gets any weaker. The stocks rally on Friday and slight USD weakness ended a 3-week losing streak for stocks. Part of that is the hope that, you know, maybe the Fed are past the worst of what they're going to do in the way of rates. That, you know, there's going to be more increases, but maybe they're going to scale them back. You know, we maybe see 75 in September, maybe only 50 after that, and then maybe only 25 after that. But of course, we'll have to wait and see. And as they say, it really depends on the data. Now, Biden's holding back scrapping Trump's tariffs on China. As I mentioned, China inflation is lower due to the lockdowns. The currency, the yuan, is weak, and that is impacting their commodity demand. Oil steadied at the end of the week on Friday. It touched 81 during the week, and then it managed to have a bounce back to 85, 86, touched 87 actually. And gold's been slow to rally from the 1700s. It did have a little rally on Friday, but not a big one. So that's sort of the macro outlook for trading tip of the week. So this is around expectations, and you know, when data's coming out, or, you know, what we're looking at for what's happening in the markets, is already priced in. So as traders, investors, we're always looking forward, you know, what will happen, not what's happened. And of course, that leads to price changes before events occur. You know, it could be data coming out, it could be speeches, it could be just longer term expectations from investors. But that's all already impacting the markets. So it's always good to study charts to assess if those expectations have already been priced into the macro, and, you know, or just prior to data. So you look at the recent movements, what could have made those movements happen. If you can't see too much that sort of stands out, then it's potentially, it is traders and investors starting to build positions, preempting what's going to happen to the economy. And of course, you know, markets sometimes can move unexpectedly on data, and that's due to the fact it's already priced in. You know, if data comes out and it's in line, you know, you're not really going to get that next wave of buying coming in if a lot of traders expected it to be stronger and they're sitting there long. So the data comes out, it's in line. So what happens to the market? You're not getting that second wave of buying coming in. All those traders that are long need to get out. So the market actually comes off. So it's important to know whether it's already priced in or not. Because these markets can have the opposite reaction to what some traders expect. You know, sometimes that's the difference between how pro traders look at markets and retail traders. Okay, we're going to move on to the technicals now. Again, just a little bit of a reminder in case you're new to watching this. Black numbers in the right hand axis just are support resistance levels from the trend lines. Then we've got the brown numbers which indicate breakout levels. Just be careful because if there's pivot points, one of them's brown as well, but it's not a complete whole line. Whereas the breakout one will be a very long horizontal line. And the claret numbers, claret, I guess, I don't know, are just horizontal levels based on 2 or 3 tops or bottoms, or where I just see support or resistance in the market. Of course, Fibonacci's are there. So again, on the right hand side there, you can see those colours for those levels. The light green one just above the red is the key one. That's the golden ratio, which is the 618 level. Okay, so moving on, here's the Dow Jones daily. So the market enjoyed a bounce from Wednesday. We had 3 positive days. It's moved higher. I've got a support and resistance in there. Resistance, the one very much at the top is one where, you know, I expected the markets to turn. Last time they got up there, it goes all the way back to April, May time. So it was a, you know, really good area for me. And the resistance there is at 34,301. Below that, I've got that downtrend line, which is 32,901. Support levels. So I've got there, I've got 31,015 and 39,570 for support levels at the moment. Just looking at the 30 minutes, again, you'll see that I've added the pivot point levels into each of the 30-minute charts. Resistance is 32,249, and I've got support at 32,065. If you notice on Friday, it did get above, but it closed pretty much at R2, so the second resistance level. And then okay, so here we're moving on to the S&P. So again, got some lines on there. I've got that sort of that 4,300 just over. Again, that was a great level for me. I bought some put options there when the market rallied sort of mid-August. And you know, I've been watching that level for so long, hoping the market would have got back up there, and it did. Because, as I say, it goes all the way back to the April, May time. And so my resistance level there remains the same if it does break through, which is 43.03. But I've got a lower one, which is that downtrend line, which is 41.14. Support is at 38.88 and second support at 38.73. Moving on to 30-minute, and here on the 30-minute I've got resistance at 40.80 and I've got support at 40.26 and 40.05. That's on the 30-minute, and again you can see that the pivot points are on there, and it managed to close above R2. We're now going to move on to the Nasdaq. And you know, just remember, so the Dow Jones is the industrial stocks, S&P is top 500 stocks in the US, Nasdaq is the tech stocks. So here we're looking again at the daily. First of all, got that high in there. You know, it did pop through, but it didn't stay up there for very long. Again, that one from April, May. So on Nasdaq, I've got resistance at 13,565. Another one on that downtrend, not far off of where it closed actually, which is at 12,650. Support is at 11,942 and at 11,904. And then we move on to 30-minute. So on the 30-minute here, I've got resistance at 12,621 and I've got support at 12,405. Moving on to the Russell. So the Russell's made up of the small and mid-cap stocks. Again, so here on the daily, I've got resistance at 2004 and at 1951, and support at 1784 and 1768. On the 30-minute, I've got resistance at 1886 and I've got support at 1844. The support line is a breakout. If it goes below there, I would expect the market to go lower. Just remember, only my view, only what I'm seeing. It doesn't guarantee anything. Okay, so let's look at a couple of currencies. So here's cable, which is the pound against the dollar. So the dollar weakened at the end of the week. And this, I believe, is because investors expect the Fed to start to taper these rate hikes towards the end of the year. But just don't be too sure, because it really is going to depend on the data. So on Wednesday, the pound made a new low against the dollar for quite some time, just over 114. And now, you know, it did have that tiny recovery on Friday. A little bit of hope came in, but I just can't get bullish at a pound at the moment. And so on the daily, I'm seeing resistance at 122.38, which obviously is quite a way away. But below that, I've got 117.42, and I've got support at 113.91. Then if we go down to the 30-minute chart, on the 30-minute chart, I'm seeing resistance at 116.03, and I've got support at 115.52. Again, that's a breakout. If it gets below 115.52, I can see the pound coming under pressure again. But we're going to have to wait and see. Moving on to the euro. So ECB rate hike did nothing for the euro. It managed to get it just above parity with the dollar, but it didn't stay there. On Friday, it did have that little bit more success. And so on the daily, I've got resistance at 1.0222 and also at 1.0209. And support below the dollar at 0.9859. On the 30-minute, as you can see there, on the pivot points, they worked great on Friday. It was rejected R2, which was perfect. And so resistance, I've got at 1.0054, and I've got support at 10035. But again, I've got that as a breakout level. So if it pops through there, I can see the euro coming under more pressure again. Now, you know, just remember, these is just how I'm analysing and what I am seeing in the markets. This is not recommendations for you. They're just things you can bear in mind when you're making your own decisions. Okay, so Bitcoin. Bitcoin was under pressure all week. It touched 18,360, but on Friday again, you know, it had that recovery, that boost, and it bounced back to over 2,000. And I would say that's probably partly NASDAQ and partly the expectations of this ETH merge going through. So the brown one above, the 27,380, is a breakout, and it's been there for ages. Now, you know, I'm not expecting it to get there anytime soon, but, you know, just remember that in the back of your mind, that 27,380. If it gets through there, then, you know, that is a breakout as far as I am concerned. But we've got resistance at the moment at 25,260, and below that at 22,801. Support coming in at 18,115. Moving on to the 30-minute, I see resistance at 21,651, and I've got support at 21,055, so just over 21,000 there. and then a breakout on the downside if it manages to drop below 20,190 again. Hopefully it won't, but we just have to wait and see. I say that a lot, don't I? But you know, that's trading. We do have to wait and see. Okay, so Bitcoin versus Nasdaq. Again, this correlation is still there, and you can see it as plain as day. You know, look at the way they're responding to each other. But of course, you know, the Nasdaq is the stocks, and it's Bitcoin that's following that very loosely. And of course, that's mainly because there's so many institutions in Bitcoin these days. Moving on to commodities. So here we've got the gold daily. You know, it tested that 1700 level. It doesn't, at the moment, it just doesn't seem to be comfortable down there. For me, you know, I'm long call options on the 1700 strike. So, and I just feel that, you know, it's a good buying level for the moment. Just remember, that's not a recommendation. That's how, you know, it's what I'm doing. Now, but you know, gold is sort of in a fairly tight range, and you know, it's, well, for what it's been in comparison to some of the crazy stuff it's done, for sure. And of course, right, so we've got resistance. I can see that at 1759, resistance at 1730, support at 1703, and support at 1692. And if we 30-minute, here I can see that we've got resistance at 1740 and support at 1724. So again, I'd probably expect a little bit of a breakout depending on how the data and stocks go this week. Not sure which way. Okay, so now we're, last but not least, is oil. So WTI. You know, it was a mixed week for oil, really. Ended a bit stronger. It managed to get back to sort of over 86. As I say, it did test 81 the previous day on Thursday. Sentiment seems a little bit mixed at the moment on oil. So resistance quite a way away at 98.09 and support at 80.87. So support's a bit closer, but you know, I don't like to try and make levels up if I don't see anything else. It's as simple as that. So on the 30-minute, I see resistance at 87.20, and I see support round about the 84 level, 84.08. So that's the analysis. Just a little bit about us and what we do. So Symax Fintech, this is our services. We provide a daily newsletter. You know, this hopefully prepares you for the week ahead. But we also do this daily newsletter where you're getting global news, you're getting my views, and you're getting fresh chart levels on a daily basis from us. So, you know, why not subscribe? You know, give it a go, see if you like it. And then we've got workshops, one-day workshops, 1-week courses, and then we've got our 4-week masterclass, which sort of really brings you along and accelerates that learning process. Actually, my new accredited masterclass starts tomorrow. And then we also provide trader mentoring, do consulting to companies with hedging, exchanges and brokers for educational content, and we've got a much bigger academy coming very, very soon. So I will let you know all about that as soon as it happens. Now, if you've got any questions, please reach out to us. Or if you want to subscribe or find out more about what and how we can help you. So info@symaxfintech.com. Any questions that are trading related that you want to aim directly at me, I'm more than happy to answer them if I can. chris.tubby@symax-int.com. Have a great week and hope to see you again next weekend. Or next Monday afterwards for our next one of these. You know, we'd love to get your feedback actually on, you know, whether these help you. and also anything else you'd like to see added into these. So if you've got anything, contact details are there. Reach out to us. Have a great week.